Welcome to Capital Currents, where the flow of business news and market trends keeps you ahead of the tide. I'm your watchdog, and today is Friday, August 29th. In today's episode, let's recap earnings from Best Buy, Dick's Sporting Goods, Urban Outfitters, and Snowflake. The stock market was back to setting record highs yesterday. The S&P 500 and Nasdaq both added about 0.2%, which was just enough to push the S&P to its 19th record close of the year. Tech and energy stocks were the two best performing sectors yesterday. Now, speaking of tech, the big headline yesterday was, of course, Nvidia's earnings, which came out after the closing bell. But outside of Nvidia, the other thing that investors are watching closely is trade policy. President Trump followed through on his threats against India, doubling tariffs on Indian imports from 25% to 50% as a penalty for India buying Russian oil. Those tariffs officially go into effect starting today. Meanwhile, negotiations are still happening on the other trade fronts. The EU is planning to remove tariffs on US industrial goods in exchange for Trump lowering tariffs on some of their stuff like cars and car parts from 27% down to 15%. And there still continues to be ongoing negotiations with China to work out a long-term trade deal. Senior Chinese negotiators are in Washington this week to keep trade talks going with the US. So yeah, plenty of moving parts right now, especially when it comes to tariffs. A lot to watch out for as we head into the fall, so I'll be keeping an eye on all that stuff. Now, sticking with earnings, let's talk about numbers of two big retailers that reported earnings this morning. First up, we have Dick's Sporting Goods. The sporting retailer had a strong quarter. Not only did they beat earnings, but raised both its annual sales and profit outlook. The company now expects comparable sales to grow as much as 3.5%, and earnings per share could hit $14.50 this year. What's impressive is that these numbers already factor in the impact of tariffs. But despite the tariffs, Dick's still managed to grow their business. Now, on top of the earnings growth, Dick's also saw comparable sales increase by 5%, driven by a rise in the average ticket. People are buying more and spending more per purchase. So Dick's Sporting Goods looks to be in a good shape here. And remember, they're about to close on their $2.4 billion acquisition of Foot Locker in September. Next, let's talk about Best Buy. Their earnings weren't as strong. They did beat earnings, but kept their full year outlook unchanged, which isn't super inspiring since they already lowered guidance back in May. Tariffs are clearly having an impact here. Best Buy said they raised prices earlier this year and basically said they're waiting to see how tariff policy shakes out before adjusting guidance again. Now, the bright spot for the company was online sales. US e-commerce revenue grew by more than 5% in the quarter and now makes up over 30% of their total US sales. Best Buy said they also launched a new third-party marketplace this month, doubling the products available on their website. So while tariffs are stinging a bit, digital growth seems to be a bright spot for the company. You know, I'm just happy that Best Buy is still around because it's just a great place to physically go and look at technology before actually buying it. That might be their biggest problem, is that people just go there, do some window shopping, and end up buying it cheaper on Amazon or somewhere else. That's all the business headlines I have for you. Let's take a look at some stocks making moves. Snowflake shares are ripping higher after the company posted an AI-fueled earnings beat. The cloud infrastructure company said about 25% of their customer projects last quarter used AI to analyze data in their cloud database, and that demand pushed product revenues up 32%. As a result, Snowflake is raising their full-year outlook. They're now expecting $4.4 billion in product revenue, which is up from the previous estimate of $4.3 billion. Snowflake sells their services through big players like Google, AWS, and Microsoft Azure, and management says that Azure has been growing the fastest. Earlier this year, Snowflake has even expanded its partnership with Microsoft Azure to give customers direct access to OpenAI's tools. You know, we talk a lot about how chip makers like Nvidia are cashing in on the AI boom, but don't forget that data infrastructure names like Snowflake have been a big winner as well. Just yesterday, shares of MongoDB jumped more than 30%, and Databricks also raised a fresh round of funding, giving them a valuation of $100 billion. So it's clearly not just Nvidia eating in this AI economy. Snowflake stock is up more than 10%, and the stock is up nearly 80% in the last year. So Snowflake investors are having a good time right now. Snowflake is one of the few investments that Warren Buffett actually messed up on. He actually let go of his entire position a few months ago. On the flip side, shares of Urban Outfitters are sliding this morning after the retailer warned that Trump's new tariffs could hurt margins and force price hikes. The company imports most of their clothing from India, Turkey, and Vietnam. And as I mentioned earlier in the show, India's tariffs just doubled to 50%. Now, Urban Outfitters actually did beat on earnings for Q2, but investors don't love the tariff warning, which is sending shares down 3% this morning. That's all for today's show. Keep navigating those waters and see you tomorrow.